session. So in today's session, we will be discussing about the concept of document splitting. So within document splitting, we have different concepts of item categories, document types, splitting characteristics, zero balance clearing, and activating and deactivating the document splitting. Okay. So if I talk about document splitting, so what does it mean? Document splitting means to have the balance sheet and income statement insert the financial statement at the profit center level. Okay. So in order to have our financial statements prepared at the profit center level, we must activate the document splitting. And while activating the document splitting, we must make sure that document splitting characteristics would be our profit center. Okay. And the profit center, and by doing this, we will ensure that the profit center becomes mandatory in every transaction. Okay. Now, let us go to another point. Another point is the profit center is not ready for input for asset customer vendor. When I tell this, what I mean to say is we have different modules, right? GL, asset accounting, AP, AR, right? So for these three modules, sub-modules, profit center is not ready for input at the transaction level. This applies to all. So then, what happens in asset accounting? From where the profit center comes at the transaction level in asset accounting. Okay. So in asset accounting, it comes from asset master account assignment. When I tell this, I mean to say that while creating the asset master, we are assigning either the cost center or WBS element. And inside the cost center or WBS element master, there is a profit center. Okay. So whenever we do any transaction for any asset, so inside that asset master, we have a cost center, and inside that cost center, we have a profit center. Okay. So that is how inside the transaction, the profit center will be captured from the asset master data. Okay. Now let's come to AP and AR. So in case of AP and AR, the profit center for the AP and AR line item in a transaction will be derived from the offsetting account. Okay. For example, let's say I have expense debit and my vendor account credit. So in the expense account is a GL account, right? And vendor account is a AP module. So in AP module, we cannot put the profit center at the transaction level, but here we can put. Okay. So let's say I am putting the profit center here as profit center 1. This same profit center will be derived for AP line automatically. Okay. So this is what we call is the profit center derivation in the AP and AR from the GL. Okay. So now I hope this second point is very much clear. Let us again read through that. Read through both the lines. Okay. First is we need the concept of document splitting to prepare the balance sheet and income statement at the profit center level. And when we are activating the document splitting, then we make profit center as mandatory input. Okay. Mandatory input in every transaction. But we have understood that transaction for asset accounting, transaction for AP and AR, in those we cannot directly input the profit center, but the profit centers are either derivated or they are brought from the master data. These 2 points we have understood very well. Okay. Now third point is it can be input only for the GL accounts. Now if we cannot put the profit center for the sub GLs like AP, AR, asset accounting, then it must be inherited from the GL accounts, right? For which the profit center is input manually. For example, for the material accounts, the profit center is picked from the material master. For the asset account, the profit center is picked from the asset master via the cost center. Okay. So we need to do some mandatory setting for the GL accounts and document splitting, based on which the system will automatically split the accounting lines in the journal entry to the appropriate profit center. Like in our example, we have seen in the AP line, the profit center was coming from the GL, right? So this setting we have to do now. So this is all about the concept of document splitting. And we must also know that there are three types of document splitting functionality. One is active document splitting. Okay. Second is passive document splitting. And third is zero balance document splitting. Now, when the active document splitting comes into picture, active document comes into picture when we have profit center already in one line in the entry, okay, but in another entry we do not have profit center. Okay, so in the line which we do not have profit center, there the profit center will be inherited from the line which has the profit center. Got it? So this is what we call as the active document splitting. Coming to passive document splitting, it means profit center is not available in any line. If profit center is not available in any line, then how the profit center will be derived? Profit center will be derived from the base transaction. When I say from the base transaction, let's say I have a vendor invoice. Okay, vendor invoice, suppose 500 rupees invoice I have. Now when I want to make the payment of this, so at the time of payment I do not have the option to put the profit center. Okay, so then how the profit center in the payment transactions it will be derived? It will inherit the same profit center that is there in the invoice. Okay, that is what we tell in this particular configuration over here. We are saying profit center is mandatory. Okay, and profit center is my splitting characteristics, and we are using this standard method with inheritance checkbox. Okay, so now we have understood active and passive document splitting. Active document splitting means in one line there will be a profit center, and in the other line the profit center will be derived. And passive document means there will not be profit center in any line, but it will be derived from the base transaction. Okay, zero balance document splitting means at the profit center level the balance will be zero. Let's say expense 1 is of 500 rupees, expense 2 is of 200 rupees, and expense 3 is, let's say, 100 rupees, 1000 rupees. Okay, and my supplier account is the total it becomes 1700. So this is my credit, right, and expenses are debited. Now keeping the profit center, let's say this has profit center 1, this has profit center 2, this has profit center 2, and now we cannot put the profit center in AP line, right? But if we do profit center 1, we have how much? 500, right? Profit center 2, we have how much? 1200, right? Now, but the supplier is 1700 and profit center is not there, right? So this supplier line profit center should be divided among profit center 1 and profit center 2. So there will be supplier twice, okay, and one will be 500, and this will be updated with profit center 1, another will be 1200 with profit center 2. So this will automatically happen in the backend. User will pass this particular entry, okay, and this particular thing will happen in the backend automatically. That means supplier line which doesn't have any profit center already allotted, it will get splitted into multiple lines, so that at the profit center level the balance is 0. When I say balance is 0, expense 1, so debit, so see, debit at profit center 1 is 500, and here credit, this will be credit, right? Supplier is my credit. Then credit in the profit center 1 also becomes 500. So profit center 1 500 debit, profit center 1 500 credit. So now at the profit center level the balance is 0, right? So that is what is this particular setting is here. If you see here, I have specified that at the profit center level the balance should be 0, and profit center is mandatory in every transaction, okay, and this will be the account, this will be my account, which will help in clearing the balance at the profit center level, okay. And this inheritance we have already discussed. Now let's look at the concept. So now we are very much clear until this, how the profit centers are derived. So we need to do some mandatory settings for the GLs and document types on which the system will be splitting the accounting lines in the entry to the appropriate profit centers. Now what are those configurations steps that will be needed, that we will be discussing. So point number 1 is item categories. Item categories is nothing but we will bifurcate our GL account ranges into different item categories. There are different item categories like balance sheet account, P&L account, material account, okay, and different others. So based on the relevant criteria, like we have like cash, discount, income, these are the different classifications. So what we will do is we will classify our GL account from and to, means ranges into different item categories. This is one setting. Second setting is we will assign the business transaction and business transaction variant to the document types. So whatever are the standard document types, for those standard document types the business transaction and business transaction variants are already assigned. If there is a need to create any new document types, okay, then for those we must assign the business transaction and business transaction variant. Coming to splitting characteristic, this is another configuration wherein we specify the profit center is mandatory and the balance at the profit center level I want to see the 0 balance. Then we have to set, if we are making the profit center level 0 balance, then we have to specify which account will represent that balancing figure, okay. So we set the balance here. Now when we create this particular GL account, we must make sure that this GL should be post automatically only. That means no one should be allowed to post manually into this particular account. Now last step is that we have to activate the document splitting for our company code, okay. So the method that we will be using is all 0s 12, and we will mark this inheritance. So with this we have completed the document splitting configuration and the session 7 together. There are a lot more to cover in SAP FICO module, which we will be covering in the sessions going to come. So with this I am stopping my today's session, and we will connect again tomorrow.